The Bitcoin ETF launch was one of the most successful product launches in financial history. No exaggeration. There is now roughly $113 billion in Bitcoin ETFs. That's a little more than 1% of the assets under management of all ETFs. So what is next for Bitcoin ETFs in 2025? Let's talk with Samara Cohen. She's the Chief Investment Officer of the ETF and Index Investment Business for BlackRock. She runs the ETF business at BlackRock. That's what she does. She also runs the largest Bitcoin ETF, the iShares Bitcoin Trust. Mike Aiken's also here from ETF Action, my friend and all-around ETF expert. Samara, from almost nothing to what, over $100 billion in assets? IBIT has half of those. Congratulations. How do you explain the success? Is it just retail investors, a great up year with the price of Bitcoin? Is it the ETF wrapper? I mean, explain how.
It's all of those things combined, Bob. It is both interest in Bitcoin and then confidence in the ETP wrapper, which came together in 2024, where there was a bridge between the two worlds. Now there are kind of three broad investor bases: individual investors, wealth advisors, and institutions. To your point, individual investors were really the driving investor base in 2024. But also there were a lot of crypto native investors that preferred the ETP wrapper and simply swapped wrappers for their existing Bitcoin investments. So it was both of those things that came together for all of that.
Mike, do you agree with that? I mean, it seems like the ETF wrapper, I know I'm an ETF guy, but it certainly attracted a new set of investors. Why is that? And give us your take on why this product was so spectacularly successful.
Yeah, I mean, I think the ETF wrapper is still undefeated when it comes to terms of getting access to liquid asset classes in an efficient wrapper and a meaningful way to trade it. So just, if you ask me if I'm going to invest in Bitcoin and I might do it on an exchange like Coinbase, or that's got, somewhat oversight, but not a lot, or if I do it in a hard wallet or do it through a firm like BlackRock or Fidelity, I'm going to pick BlackRock and Fidelity every day of the week and twice on Sunday. So I think the wrapper is a big part of this component. There's clearly demand for this asset class for these types of digital investments, but the ETF wrapper provides a whole new level of security to that. In terms of where the demand's coming from, I mean, I think Samara hit it. If you look at the ownership of the data that we currently have as of 9/30, a lot of it is being driven by the retail market, because we can't trace the ownership back to 13F filings. And what I mean by that is 60% of all ETF assets can be traced back to 13F filings here in the US. Only about 25% of the cryptocurrency can be traced back, and a lot of that is through IBIT, which is the BlackRock product. So, and of that, most of it is hedge funds, not investment advisors. So clearly the demand currently is hedge fund driven and from the retail side of the coin.